Hi, I'm Emerald Fisk. I'm a property investor and I'm a mortgage advisor, and I'm here today to not give you any financial advice, but I am here to talk about why your credit score is so important to anybody that wants to buy property. So I'm going to give you the 3 main points that you need to know about your credit score. Firstly, what is a credit score? Now, a credit score is on your credit file, and if you're worried about making sure your credit file and credit score stays in tip-top condition, stay around to the end because I'm going to give you a tip to combat this. So a credit score is the number at the top of your credit file that you're given on how good you are at maintaining, paying all of your bills and any loans that you've taken out. Now, your file shows every single loan that you've got, every single bill that you've paid, and any time that you miss a payment or default, then you will start getting numbers attached to this, and this will affect your credit score, which is your number at the top. So you might see people going, I've got 999 on Experian. Well, that's the best credit score that you can get, which means that they've got no adverse credit on their file. Adverse meaning they've missed a bill somewhere along the line. So on your credit file, if you start missing payments, this comes into a number of categories. So it starts off that you've missed a payment on a loan or something that you should or have agreed to pay. Then you may default on that. After a default, you might get a CCJ, also known as a county court judgment. That's where someone's gone to court and the court has agreed that you owe someone money and you need to pay it. After a CCJ, you might enter into an individual voluntary arrangement, also known as an IVA. So this is where you go to somebody and they help consolidate all of your debts and you pay it monthly over time at a reduced rate that is affordable for you. Now, if you cannot enter into an IVA, or if you're still struggling, then this is when you end up in bankruptcy. So this is the worst thing that can go on your credit file, and from missed payment all the way through to bankruptcy, all of these scores will stay on your credit file for 6 years. So your credit file is really, really important if you're looking at taking out mortgages. Now, there are lenders that we call adverse credit lenders. So they may lend to you if you've got some adverse on your file, maybe some missed payments, some defaults or some CCJs. However, because they deem that loaning to you is more risky, those interest rates are a little bit higher. If you're all the way down at having adverse like IVAs or bankruptcy, then there is little lending available for you in the 6 years after that event, because anything that goes on your credit file stays there for 6 years. So a lender may still lend to you, but it would be a very low loan to value. So if your house is valued at 500,000, they may only loan 20%, which might be 100,000. So they've got lots of built-in security if you were to default on the loan with them. They also would charge you a much higher interest rate. So you might be being charged double what the standard rate is on the market at the time. So my top tip to combat this risk is just pay your bills on time. Don't have any late or missed payments on your credit file. I've seen situations where somebody's not paid an £85 parking fine. It's gone all the way to a CCJ, and then every single mortgage they've taken after that, they've added at least £85 to their monthly payment on numerous mortgages because they've not looked after their credit file in the beginning. If you're a property investor, if you're a person looking to take out a mortgage, then protect your credit file at all costs. I've been Emerald Fisk. This has not been any sort of financial advice. If you've enjoyed this video, then comment below. Don't forget to like, subscribe, and hit the notification bell, and we will see you on the next video.